Thanks so much for joining us. It's an absolute pleasure to have you this morning. My name is Jade. I'm our program coordinator at Focus, so I help with any of the parent support that's needed. And today, without ado, it is a pleasure to introduce to you Greg, who is also a Focus dad. Greg, take it away.
All right. I'm going to share, make sure I'm sharing the right thing here. Okay. All right. Well, good morning, everyone. Thank you for being here. My name is Greg Corneille. I'm the founder and owner of Choice Wealth Management. We're a registered investment advisory firm here in the Atlanta metro area, focusing on comprehensive financial and retirement planning, investment management, and of course, financial planning for special needs families like ours. This is the this is my top financial planning tips for special needs families. Quick disclosure, again, we're a registered investment advisory firm, and all the information here is presented for educational purposes only. It's not intended to make any offer or solicitation for the sale or purchase of any specific securities or investments. And please be sure to consult with a qualified financial advisor or tax professional or legal professional before implementing any strategy or advice discussed here. All right. Our agenda real quick, give you a quick introduction, a little bit about my background. How you feeling? I'm gonna do a little activity here. This is virtual, but we're gonna do a little activity here to kind of take the temperature of the room. We're going to talk about, and these are kind of the tips that we're going to kind of go in depth a little bit here on prioritizing your own financial security, taking full advantage of available resources and support, protecting your the eligibility for government benefits for your special needs child or loved one, protecting against catastrophic risks, and ensuring your wishes for your child are met. And then we'll take questions at the end. All right. A little bit about my background. I'm a graduate of Hampton University with a finance degree. In my past life, I was a military intelligence officer. I went to college on a Army ROTC ship, and then after that, I dove right into the financial services industry, where I've been for the last 17 years or so. I do designations, among them the certified financial planner. Again, I'm a chartered special needs consultant and chartered retirement planning counselor designations. And then I serve on the board of the National Association of Active Investment Managers. All right. But aside from all that, or over and above all that, the most important thing that I do and that I am is being a husband and father to these people right here. Okay, so this is our family. This is a Christmas picture, but it is the most recent and decent picture that I could find, and a family picture that I can find. And so that's what you're going to get. And just give you a little bit about my story. I was in the field for about 10 years before my oldest son was born. My oldest son is autistic, and then my younger son deals with selective mutism. But when we found out about his diagnosis, I realized, again, I had been in the field for 10 years or so, but I realized how much I didn't know about this area and this aspect of financial planning. And that really is what kind of led me down the path to really working more in this space in terms of special needs financial planning, and then ultimately pursuing the Charter Special Needs Consultant designation. All right. So I told you we're going to do a little activity. It's called How Are We Feeling? Okay. So I'm going to show you a few pictures, and I want you to just kind of comment. I don't know if I can, I can't really see the comments. I've got my screen here, but just play along. Tell me a little bit about how you're feeling. Okay. One of the following pictures describes where you are right now. Is it number one, Janet giving us instructions on how to give advice about disciplining our children? Don't do it. When you ask a special needs parent, how's everything going? Out Florida Evans. I thought I heard you say you weren't able to address something in my child's IEP. All right. And then my personal favorite, this is the one that this kind of resonated with me because this is me most mornings trying to get my son to his therapies on time. It's a struggle. It's a struggle. All right. So I don't know if anybody dropped any comments on which ones they how they're feeling. 1, 2, 3, 4. All right. But the point is, we're going to get into discussing some financial planning topics. Some you may have heard of, some maybe you haven't, right? Um, and it can seem a little bit overwhelming when we're thinking about the idea of, how do I accomplish my own financial goals alongside planning for the long-term care and financial security of my special needs child or loved one. And let me take a minute and just kind of tell you a little bit about our story, my wife and I, when we learned about my son's diagnosis. We were in Maryland, and we're just kind of coming out of COVID, and I remember I signed my son up to play soccer, to play in this kind of soccer league thing, and he just wasn't able to do it. I remember calling my wife from the field and telling her, hey, something's going on. We have to, we got to get him checked out. Fast forward, we get him evaluated, we get the diagnosis, and there was there's this weird duality, I think, to being a special needs parent or caregiver, especially when your child is younger. Because on the one hand, you start to think about the future. What's going to happen when he grows up? Who's going to care for him? What's going to happen if we die? We have to live forever, right? But then on the other hand, and this is what my wife and I kind of came up with, we the best thing for us really is just to focus on what's in front of us. Okay. You kind of have to live in the present and again focus on what's in front of you. And so if you're feeling overwhelmed, I just want to share this. And I share this really with all my clients, but I think it's especially applicable to our special needs families. These three things, as you're thinking about financial planning for your special needs child. Number one, control what you can control. Okay. There are some things that are going to be out of our control. Okay. Let's focus on controlling what we can control. Number two, focus on doing the next right thing. Okay. Or the next best thing. All right. Now, again, I'm going to talk about a number of different things, and you may be looking at them and say, well, I need to do this, 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 this. Okay. let's focus. Let's do the next right thing. Let's do the next easiest thing. What can we do today? What can we get the ball rolling on today? Okay. And let's tackle that one step at a time. Right. And then the third thing is really financial planning, in my view, is just all about doing the best you can with the resources that you have. Okay. That's all we can do. It's not a comparison game. Just do the best that you can with the resources that you have. Okay. So the financial planning process generally covers 6 key areas. All right. One of the common misnomers that I hear about when we think of special needs financial planning is that it's all about special needs trust and able accounts. No, the truth is those are aspects of it. but your financial plan or your financial planning process is going to include looking at your overall situation through the lens of, hey, there's a special needs child or children as a part of this family. What do we need to do differently? Okay. So, for that reason, we're not going to go super deep into any one of these areas. We're going to try to keep it high level. Um, some things that we're going to talk about, I am not the subject matter expert on. I'm not an attorney. I'm not an estate planning attorney. I'm not a tax accountant. I'm not a public benefits coordinator. There's a number of great recorded workshops on the right there on the Focus website that will go deeper into some of these topics. But again, it's just about figuring out how having a special needs child or dependent um, impacts each of these different financial planning areas. Okay. One more thing before we really get rolling. Keep in mind that some of the things we're going to talk about are going to have differences depending on your state or region. Again, I'm in Georgia. I'm in the Atlanta metro area. I know we may have some folks that in different areas or different states. So again, we're going to keep this at a high level, and just be sure to do your research for your particular state and region. All right. So, without further ado, tip number one: prioritize your own financial security first. Okay. When the oxygen mask drops down in the plane, what do they tell you? Put your mask on first. Okay. The best thing that you can do to secure your children's financial future is to secure your own. Okay. And so with that, we're going to talk about some of I mean, this is really the foundational steps that apply to us all. Okay. Um, but again, it's the best thing that we can do for our children. Okay. So that's talking about cash flow or budgeting, making sure that your income exceeds your expenses, right? If not, that's not going to be sustainable. Having an emergency fund of at least 1 to 3 months worth of living expenses. Debt management, eliminating high interest consumer debt, using either the debt snowball method or debt avalanche method. Debt snowball method is paying off all its debt first. The avalanche method is paying off the highest interest rate debt first. Okay. Finding a strategy to do that is important. Okay. And then retirement planning, just a few quick things that I see. And this is, honestly, this is a lot of, mainly the crux of what I do with clients, especially for those that are those who do not have special needs loved ones. It's retirement planning. Okay. Making sure, and this is what I call the low hanging fruit. Okay. If you are if you work for a company that has a retirement plan and there's an employer match to your 401k or retirement plan, for example, making sure that you're contributing enough to get that full match, because that's free money, right? That's an immediate, maybe 100% or maybe 50% return on your money. Okay. So make sure that you're taking advantage of that. Okay. Um, Retirement plans and IRAs obviously are tax advantaged accounts. Okay. So to the extent that you can, you want to take advantage of every opportunity to fund those accounts. Okay. You say I have spousal IRA contributions listed here. One thing that I know about special needs families, and my family included, is that they're more likely to be single income households. I was having this conversation with a friend of mine who's also a client, and has a special needs child. With almost without exception, I have not spoken to a special needs family whose employment or employment capacity has not been impacted in some way because of their situation, right? So maybe maybe somebody's made a concession on a particular job. Maybe the family has decided that one parent is going to um, exit the workforce so that they can be for the child. Or, like in my case, we homeschool my son, okay, so that he has extra time for the therapies and things, and that we're able to teach him in the way that he learns. And so, um, so definitely in situations like that, when one spouse is not in the workforce, spousal IRA contributions can be made, um, for that spouse that is not working. All right. And then retirement plan and income projections. This is just taking a look at your overall situation, um, taking a look at your projected retirement age, and lifestyle that you'd like to maintain or that you need to maintain, and putting the pieces together, doing the math to see what you need to do to get you from here to there. Okay, all these things are important, and they're a part of they're a part of your financial planning picture, regardless of whether you have a special needs child. Okay. So, again, prioritize your own financial security. All right. Number two, take full advantage of all available resources and benefits. Okay. So, what do I mean by that? All right. So, we're talking about public benefits, okay, resource dependent benefits, such as supplemental security income. Okay, supplemental security income is up to 940 is can be up to $943 a month this year. Um, it's resource dependent. So the resource limits, and many of you are familiar with this. Um, Resource limits of $2,000 per individual, $3,000 per couple. The income and assets of the parent are deemed available to children under 18 and living with their parents. And so, if you're a parent and your resources exceed these limits here, then your child under 18 is not eligible for supplemental security income. All right. However, when they turn 18, okay, then they can become eligible for that, right? Earned income. So if your child or adult child is working, okay, their earned income can reduce their SSI benefit by about one half of their wages. Okay, this one, there's a key change: in kind support. Okay, or it's you might see the term in kind support and maintenance, or ISM. Okay, so in kind support, food and shelter generally reduces the SSI benefit at $943 a month by about one third. However, there was a key change that was just passed a few weeks ago. Um, as of September 30th of this year, food will no longer be counted as in kind support and maintenance, or ISM. Okay. Now, SSI, you see, SSI is the gateway to Medicaid. Okay. What that means is that in many states, including Georgia, if you are eligible for SSI, you are automatically eligible for Medicaid. Okay. And so in practicality, you might some families might look and say, okay, well, you know, when our child turns 18 or 22 or 25, maybe they're able to work to some degree, but they're going to be living with us. Um, we can kind of supply for their needs. And so the supplemental security income, that's nice, but it's not, it's not the end of the world. So that might not be as important, but Medicaid, again, SSI being the gateway to Medicaid, that is important. And so that's why you want to maintain your eligibility for SSI. Okay. Right. Non-resource public benefits. Okay. So here we're talking about Social Security disability income. Okay. Now, Social Security disability income can be claimed based on the work record of a parent for a special needs child. Okay. It's generally, or usually in a lot of cases, going to be higher than SSI. The disabled adult child is eligible to receive SSDI, when their parent files for Social Security or at death. Okay. And then for that reason, it may be advantageous for the parent to not delay claiming Social Security. So when we do retirement planning projections, and if you've done projections of this sort, you may have seen this, you may know this, um, or you may be living, you may be at this moment in your life. Um, on paper, it may make sense to delay taking Social Security to age 70, right? Or setting aside the fact that you have a special needs child, it may make sense to delay taking Social Security until age 70. You draw from your assets until then, and then you take the higher benefit at age 70. Okay. However, because your disabled adult child can qualify for SSDI when you start taking Social Security, a lot of times there's a greater household benefit and a greater overall benefit by the parent taking Social Security at age 62 or as early as possible. Okay. So again, it may be advantageous to not delay claiming Social Security. All right. Non-resource public defend, excuse me, uh, non-resource dependent public benefits, Medicare, Medicaid waiver programs such as Katie Beckett and Now Comp, um, family support and respite funding from the Department of Behavioral Health and Disabilities. And then, of course, there are state special education scholarships and voucher programs. Again, a lot of these things I am not the subject matter expert on. There are other webinars that will go deeper into these things. And to be perfectly transparent, my oldest son is 7. So a lot of these things we have not walked in personally. And so we're going to have to, I'm going to be on those webinars right along with you as the time draws closer that we have to start thinking about these things. But what I want you to take away from this is that support is out there. Okay, financial support generally exists for many needs through things like waivers, state programs, nonprofit organizations. Um, Support funding generally exists for specialized equipment, specialized clothing, recreation, community activities, incontinence, vehicle adaptation, services for medically fragile children, exceptional disability related living costs, specialized nutrition. So, again, what I want you to take away from this is going back to if we go back to those foundational I talked about, prioritizing your own financial security. If you're looking at these things and you're saying, oh my gosh, how the heck am I supposed to worry about these things, when I've got, you know, all of these other things that I have to deal with and have to, I'm responsible for financially. What I want you to take away is that support is out there. Okay. Financial support is out there. And it's incumbent upon us to educate ourselves and to get these resources so that we can fund our retirement plans. Okay, that we can fund that emergency fund. Okay, so that we can do some of these other things that are out there. All right, so this ties into point number one. All right, also common special needs tax deductions. Okay, now again, not a tax accountant, but there are several tax deductions out there, tax deductions and credits that are specific to special needs children and the care of a special needs individual. All right. Now, medical expense deductions generally. Now, this is for everybody. Medical expense deductions are deductible to the extent that they exceed 7.5% of adjusted gross income or AGI. Okay. Now, for most people, that is, of course, uh, you know, medicine, hospital bills, things of that sort, right? Doctor's bills and the sort. Okay. There are a few different things that fall into the category of medical expenses for special needs parents. I'm just going to use the term special needs parents in this case. All right. Among them, special needs schools, unreimbursed costs. Okay, so if your child attends a qualifying special school, you may deduct the unreimbursed cost as a medical expense, including tuition, lodging, meals, transportation, and more. Okay, normally, if I send my neurotypical daughter to a private school, I cannot deduct that. Okay, if I send my son, my autistic son, to a school that has a special needs program that meets his needs, that tuition, to the extent that it is not reimbursed, is included as a medical expense. Okay, and so as you can imagine, it's much higher to get over that 7.5% of AGI. Right. Um, Capital expenditures for medical reasons. Okay. Now, this can be a big one. If a physician recommends that a capital improvement should be made to your home for medical reasons, you can deduct the cost in excess of the increase to your home's fair market value, or in some cases, the full cost. So, a good example of this would be installing a lift for someone with a physical limitation in your home. Okay. Also, if you take out a home equity loan to pay for that lift, the interest that you pay on that home equity loan is tax deductible. Normally, if I just take out a home equity loan for whatever reason, I can't deduct the interest on that. Again, if it's for a capital expenditure for medical, you can deduct the interest on that as well. Okay. Medical conferences and seminars. If your doctor recommends that you attend a seminar to learn more about your dependent's medical condition in order to assist them, the costs and transportation associated with attending these conferences or seminars are deductible. Okay. And then medical travel and transportation. So the cost of travel to a medical facility, um, and, things of that sort. So, um, okay, and then the more common special needs to tax deductions, impairment related work expenses. Okay, if you have a an adult child who is working, okay, you may be familiar with this one. You can deduct expenses necessary for a dependent with special needs to work. Examples include attendant care services, transportation, um, medical devices, service animals, medication, things of that sort. This expense is considered a business deduction and is not subject to the AGI limitation. Okay. Um, and then retirement plan and IRA distributions for medical expenses. Okay. Um, Normally, if you take a distribution from an IRA, prior to the age of 59 and a half, that is, um, it would normally be subject to a 10% penalty, 10% early withdrawal penalty. Now, there are certain exceptions to that rule. Okay. One of the exceptions is if the amount withdrawn is um, less than or equal to the amount of medical expense deduction allowable used to pay for medical care in that year. Okay. So basically, if you clear that hurdle, that 7.5% AGI, then the difference, the 10% penalty on the difference is deductible. Okay. All right. Number three, financial planning tip, special needs financial planning tip number three. All right. Protect eligibility for government benefits. Okay, we talked about the resource dependent public benefits. So the question is, given the resource limits and for SSI and Medicaid, how do we provide for the future care of our loved ones while preserving their eligibility? Okay, well, we have two primary vehicles. Okay, number one is a special needs trust. Okay, and again, we're not going to go super deep here. What I want you to take away from this is that assets held inside of a special needs trust are not considered available resources for SSI and Medicaid. Generally, there are first party and third party special needs trusts. First party trusts are funded by the assets of the beneficiary. Think about, if somebody received a settlement or a disability that occurred later in life where they've had a chance to accumulate some assets. Okay. There's also pooled special needs trusts, which are established and ran by nonprofits. But for the purposes of this conversation, we're going to focus on third party special needs trusts. Those are trusts that are set up and funded by someone other than the beneficiary, i.e., the parent. Okay. Um, these third party special needs trusts can be either standalone or testamentary. What that means is that either they can be standalone, meaning they're set up, we can set it up today, we can choose to fund it or not fund it today. Um, or it can be testamentary, meaning that the provisions for setting it up and funding it are set aside in our last will and testament. Okay. Why would you do one versus the other? Well, think about, if you let's say that you have a special needs child and maybe a grandparent is planning to leave some funds to that child. So then you may want to set up a standalone special needs trust so that they can inherit those funds at that time, prior to your death, right? Special needs trusts can be used for expenses other than food and shelter for the beneficiary. Okay. Examples include goods and services, clothing, vehicle, electronics, vacations, entertainment. There's a wide list. Again, we're not going to go super deep into the uses for special needs trusts, but there's a wide range of things that they can be used for. They cannot make cash distributions. Okay. And then third-party special needs trusts are not subject to Medicaid payback. All right. ABLE accounts. Okay, achieving a better life. Achieving a better life, or ABLE accounts. ABLE accounts are tax advantage investing and savings accounts for those with disabilities. The disability must have occurred before the age of 26. That age limit is increasing to 6 in 2026. All right. The contribution limits for ABLE accounts are generally $18,000 per year. That number gets bumped up usually every year or so with inflation. And then on top of that, the beneficiary may also contribute some of their earned income. Distributions from ABLE accounts are tax-free if used for a qualifying expense. Okay. Qualifying expenses include housing, food, transportation, assistive technology, and personal support. Okay. Again, the takeaway: assets under $100,000 held in an ABLE account are not considered available resources for SSI and Medicaid. Right. So again, we're talking about protecting that eligibility for government benefits. Assets held in a special needs trust and assets under $100,000 held in an ABLE account are not considered available resources and will not jeopardize one's eligibility for SSI and Medicaid. Right. Now, ABLE accounts versus special needs trusts. Sometimes I get this question, like, which one should I do? Which one should I do? Okay, well, it's not an either or. A lot of times it's an and. Okay, they can often be used to complement each other. Okay, ABLE accounts are great investing and savings tools. They are generally not great estate planning tools, because remember what I said earlier. The contribution limit is only $18,000 in a given year, right? So if you passed away and you left a $100,000 life insurance policy to your special needs child, well, they can only put 18,000 of it into that ABLE account, and the rest becomes an available resource, right? So that $100,000 limit is how much can be in the account, but in any given year, only 18,000 can be placed inside the account, right? Special needs trusts are the better estate planning tool. okay, for what I just mentioned. All right. Lastly, funding a special needs trust. So, funding a special needs trust, there's a few different options, a few different popular options, I should say. Life insurance is a popular option, permanent or term, depending on the amount needed and the stage in life, right? Consider second to die policies or survivorship policies. These are policies that can be cost effective because they don't pay out until the second member of a married couple dies. Okay. So for that reason, they're often less expensive. All right. Real estate. You can leave real estate, or you can leave a family home inside a special needs trust, or leave that to a special needs trust. That can be important. I mean, the family residence may be the only home that the special needs child is known. They may be comfortable there. Preserving stability may be important. It could also provide rental income to the trust if it's rented out. And then retirement planning, or excuse me, retirement plans. Um, so prior to 2020, every time there was a designated beneficiary for a retirement plan, that beneficiary could use what's called the stretch provision. They could stretch the distributions of that retirement plan out over the course of their lifetime. That rule changed in 2020. The stretch provision was removed, and the a beneficiary of a retirement plan has to distribute all of the funds inside of 10 years, generally speaking. Okay, I'm not going to get into the nuances, but generally speaking, there's a 10-year limit there. Okay. um, there are some exceptions to that. One notable exception is if the retirement plan, the IRA, the 401k, is left to a disabled person or their trust. Okay. In that case, the stretch provision still applies. Okay. So you leave a retirement plan to your special needs child, and they're 30, 35, 40, whatever it is, upon your passing. They can stretch as opposed to having to take all of the distributions out over 10 years, which is going to create more taxes. They can stretch the distributions out over the course of their life. Okay, so that's going to reduce the overall taxes of the situation. All right. Tip number 4: protect against catastrophic risks. Okay. What are we talking about here? We're talking about life insurance. Okay. Conduct a thorough needs analysis to determine how much coverage you should have and how much you should need. Okay. Now, there's a lot of different ways to do it. Some people will say, a certain percentage of your income, but again, you have to consider that we might be in a family dynamic where one spouse is not working, right, because they're doing things at home, or they're not working outside the home. So we have to consider non-monetary household contributions. So a popular method, or a method that I kind of use to help clients figure out what that need should be, is called the dime method. Okay. So if I passed away, let's talk about debts. Um, what debt would I want to be paid off? Okay. Now this could include the mortgage, although we have the mortgage listed down here. Could include, auto loans, or education loans, or anything else, right? Income. How much income would need to be replaced? Okay. To or how much income would be needed to compensate or replace what the income is that we're bringing into the situation. And again, you want to consider non-monetary contributions. Okay, so in our case, if we homeschool my son, my wife homeschools my son, if she passed away, what would have to happen? Well, I would either need to be able to retire so that I could homeschool him, or we would need to find a school appropriate for him, which might, result in, the outflow of additional funds. And so all those things need to be kind of thought about in thinking about how much life insurance one should have. Mortgage. Would you want a mortgage to be paid off for your family? And then education or special needs trust funding, right? Um, we'll talk more about the special needs trust funding with the points below. So one thing I usually will help people kind of talk about and think about is whether or not they should have term or permanent insurance. And a lot of cases, you need both, right? Because you have some needs that are temporary in nature, some needs that are permanent in nature. Okay. So, for example, a mortgage payoff, right? If I passed away today, I would want my family's home, I would want our mortgage to be paid off, right? But that's a temporary need because eventually, the mortgage will be paid off. And so 20 years from now, that may not be a need. So for the mortgage payoff, that can be covered with a term policy. Okay. Special needs trust funding. Okay. Now, Lord willing, I'm going to live a long life. Okay. So I need that policy to be around when I'm 90. Okay. So for that, I need a permanent policy. All right. Disability insurance. How much of your income would you want to be replaced if something happened to you and you were disabled? Okay. Employer or group plans typically will only cover about 50 to 60% of income. Again, many of the families that I've talked to and that I work with are single income households. And so that 50 to 60% for that person that is the sole income provider may not be sufficient. May want to consider standalone disability insurance um, um, options. Okay, and then for that partner that is not working outside of the home. Okay, how do they get coverage? Because again, if something happened to them, there's a financial injury to that household. So options for no income, group spousal coverage. Sometimes, in some instances, one spouse that may be working and may be covered under a group policy. That policy may allow you to purchase disability insurance on your spouse. Okay. Um, Disability insurance riders on life insurance policies. Those can be added without proof of income. Okay. Or without income. And then adding chronic and critical illness riders on life insurance policies. So, if God forbid, cancer or any number of different illnesses were to occur, I can access a portion of the death benefit of my insurance policy as a lump sum to help shore up expenses in my household. Okay. Last tip, and we're kind of moving along here. I just want to make sure we have some time for questions, a little bit of questions. But the last tip is ensuring your wishes for your child are met. Okay. So what are we talking about here? We're talking about making sure that we have the primary estate planning documents in place. Okay. That includes your last will and testament. Last will and testament is going to include your guardianship wishes. Okay. If we passed away today, where would we want our children to go? Okay. And who we want to care for them. For special needs families, this is something that really has to be thought about. Um, you know, my siblings live on the West Coast. Okay. Um, my wife, most of our whole family is here in Georgia. Um, because our children are, um, have already started the process of certain things and are integrated in certain things as far as their therapies and as far as receiving certain benefits on the state level and things of that sort. If something happened to my wife and my kids were sent to the care of one of my siblings on the West Coast, well, that would create an issue because for my son who's on the spectrum, we'd have to start all over they'd have to start all over. They would have to take a crash course and learning about the resources available in and in their locality, right? So for us, guardianship, we made the decision that we want one of our family members here in the Atlanta metro area to be the guardian of our children if something were to happen to us. Okay, so those are the things that you need to think about from the perspective of having a special needs child. Um, as we talked about, that last will and testament could also include terms to set up the special needs trust at death. And then again, primary estate planning documents include a living will, your end of life treatment wishes, your healthcare directive, um, guidance for your future medical care, and then beneficiary designations, just ensuring that they're up to date and accurate, especially if you've had a life event, if you've been through a divorce or, things like that. Right. And then also for our families, letters of intent. Okay. Um, these are not legal documents, but letters of intent are intended to capture the knowledge of our child's needs to guide future caregivers and guardians and trustees in providing the best care possible. Okay, so you'd include things like daily schedules, dietary needs and restrictions, medical care, education needs and desires, living arrangements, and behavior management. Right. And then guardianship and guardianship alternatives. Now, this is not necessarily an estate planning thing like that occurs like when you die. What I'm referencing here is what happens when your child turns 18. And again, there are other there I believe there's a webinar specifically discussing guardianship on the that's on the Focus website right now on the Focus YouTube page. But guardianship and understanding guardianship alternatives is important. Guardianship removes the rights of your child to make their own decisions in healthcare, financial, or legal matters, and the courts must grant that. There are other options to guardianship, such as power of attorney and supported decision making. This is something that our families have to take this step, and some of you, many of you, maybe already have if your children are over 18. But this is something that you definitely need to think about as you're getting closer to that milestone. And every situation is going to be different. It's going to depend on the needs of your child, your special needs child or loved one. Okay. So I've covered a lot of information here, and I've tried to keep it at a high level. Um, some of the things maybe you said, okay, well, I got that. I'm doing that. Check. Some of the things maybe you're like, okay, it's the first time I've heard of that. Some of the things maybe you're like, wow, this is so overwhelming. I don't know where to start. Okay. So again, I want to go back to what I said earlier. Okay. Control what you can control. Do the next right thing. Okay. That for you, that might be your takeaway from this might be, okay, well, really need to sit down and create a household budget. Really need to start tracking our spending and making sure that we're, being responsible with our spending. Okay. It may be just that, right? Just do that. For some, it may be like, okay, I know that I haven't updated my life insurance in a long time. And I know that if something happened to me, my family would be woefully unprepared to carry on financially. Let me take a fresh look at that. You know, it might be let me call up an estate planning attorney and let me start to educate myself on guardianship options and see what that's about. Do the next right thing. I just want to leave that with you. If you take nothing else away from this, control what you can control. Do the next right thing. Do the best you can with the resources that you have. And as my man Yoda says, figure it out, we shall. Okay. Now, lastly, just a little bit about our services here at Choice Wealth Management. Again, we do comprehensive financial planning, retirement planning, and projections. That also can include projections for funding or for the funding needs of a special needs trust. um, active investment management, life insurance, and of course, special needs financial planning. We offer complimentary introductory conversations, no obligation, no cost, just to kind of get to know you a little bit, get to you get to know us, learn a little bit about what your needs are, and see if we might be a fit. Again, some of the things that I've talked about here are not my areas of expertise, but I do know a number of great estate planning attorneys, CPAs that have a focus or knowledge base on helping special needs families, and I'm happy to share those contacts with you. Um, I will say, make sure that these professionals that you do reach out to do have this knowledge of working with special needs families. That is going to be super important. Okay. Um, and oh, one last thing I'll say before I close out. Um, you matter. You matter too. Okay. Again, financial planning for special needs families is not just about the special needs trust, the able accounts, the guardianship. Your hopes, your dreams, your goals, your aspirations, they matter too. Things may look a little bit different than you imagined. And there's no. My wife always says this. There's no blueprint for this thing. There's no blueprint for raising kids in general, but there's certainly no blueprint for this. But it really is just a matter of figuring out how we integrate the care and provision of our loved ones with special needs alongside planning for your long-term goals and wishes. Again, we will figure it out. And then the last thing I know I said the last thing, plug in, right? If you're new, maybe someone here is new, maybe your child is newly diagnosed, or maybe they're young. The last thing I would encourage you to do is really plug into the resources, plug into organizations like Focus, plug into organizations specific to your child's diagnosis, but you'll find a lot of information and resources there. So, but that's all I have. Here's my information. Check out the YouTube page. We're going to be putting out some videos related to special needs planning. Um, but yeah, that's all I have.
Thank you,
I hope I
Greg,
didn't.
for sharing your knowledge with us. Yeah, you have some questions in chat if you want me to start reading the first one out for you.
Yeah, yeah, yeah.
Absolutely. So your first question in the chat box is, can an 18-year-old get SNAP?
Yes, I believe the answer to that is yes. And again, I'll caveat with some of these questions as again, I'm not the subject matter expert. SSI is usually supplemented with some kind of supplement on the state level, as well. And yes, you when you qualify for SSI, you're also eligible for food assistance, generally speaking.
Thank you, Greg. And then what about SSI or SSDI for a disabled veteran parent with special need children?
So the veteran aspect, I'm not quite sure how that might integrate into it, but what I will say is that if when we talked about SSDI and the transition from SSI to SSDI, the disabled adult child is eligible for SSDI once the parent starts claiming benefits. So that could be Social Security, but that also could be SSDI. So if that parent, let's say they're able to claim disability, SSDI at 55, let's say, then at that moment their child is also eligible for SSDI. Um, if you're referring to veterans benefits, or military disability, um, to be honest, I'm not 100% sure if that would allow that child to qualify for SSDI.
Thank you, Greg. If a parent takes SS at age 62, so their adult children can receive SSDI, the parent's SS would be taxed if the parent is still working, and then in
Yeah.
parentheses, dependent on their salary.
That is correct. That is correct. And for that's the reason why in traditional, again, setting aside a special needs child, traditional financial planning, you would look at that and you would say, okay, well, if you're still working, you plan to continue working for X number of years, it doesn't really make sense to start taking Social Security. But in this case, you just have to look at the the gap between SSI and what your child would receive in SSDI, right? And okay, does it make sense to uh, have some more of my income taxable, but the trade-off is that the overall family is getting this much higher income benefit, right? So that's something that again, through financial planning, we sit down and kind of do the math and see what makes the most sense. But that's a great
Thank you,
question. Thank
Greg.
you.
Yeah, another question is need more information on special schools. So I don't know if you have any more information on schools as far as financial planning.
What I can tell you is that the term, and again, we tried to stay surface level with this, but the term special school, that's how it's defined in the in the code, the Internal Revenue Code. A school can be designated as a special school, and it doesn't have to be that the school is. It doesn't necessarily mean that the only thing that the school does is service special needs children. But if they have a program or they have a curriculum for that, then they can be designated as a special school for tax purposes. That's a question that you could probably ask the school or a school administrator, and they'd be able to tell you the answer, with yes or no, whether or not we're designated as a special school.
Thank you, Greg. Could we get a brokerage account for our kids?
Um, that is going to count as a resource. Now, the brokerage account, if you're saying, okay, the child is the child is 7, right? And I want to set up a brokerage account to kind of begin saving for them long term. Well, you can do that. I wouldn't put their name on it, right? But you can do that. But if it's in their name, then it counts as an available resource to them. Okay. So in that case, and I'm just anticipating maybe this is where the question was kind of going. I could set up a brokerage account and add a transfer on death on that brokerage account to the special needs trust, so that when I die, it's going to go into that trust and not be counted as an available resource.
Thank you, Greg. Could you explain about third-party trust not able to make cash distributions?
Yeah, it's just that they're not able to make cash distributions. They you know there there's a certain administrative cost and expense to special needs trusts. Um, you do have to, and when you set this up, you would set up, who would be the trustee, the custodian, and things of that sort. But generally speaking, there has to be some sort of record keeping to designate what the trust is being used for. Um, and cash distributions are not allowed.
Thank you, Greg. One question from earlier, are there any advantages with a special needs trust versus an irrevocable trust?
Yes, and I was having this conversation recently too. A special needs trust, money assets left inside a special needs trust are not counted as an available resource for SSI and Medicaid. An irrevocable trust, those assets are going to be counted as an available resource. Because remember, an irrevocable trust doesn't have these type of rules. You can make distributions from an irrevocable trust to the beneficiary, right? But I was working with a client recently that had set up, or I don't know if they had, I don't recall if they had set it up or they were planning to set up a an irrevocable trust. I think he had an irrevocable trust set up, and I was talking to him about special needs trust, and he's like, "Well, we have a trust." And I said, "Well, that's an irrevocable trust. It's not going to accomplish the same objective. It's going to make your child ineligible to receive SSI and Medicaid." Okay, so so that's why you definitely want a special needs trust to hold those assets.
Thank you, Greg. And someone else made a comment that a third-party trust cannot give cash to disabled. It can pay for expenses directly.
Yes, yes, um, well, my slides and but yeah, I don't know if I had it here. A number, I think it was on the slide, a number of the different uses and things that it can be paid for, that it can pay for. It can pay for those expenses directly, right? And so you can, so to some extent, you can show that, okay, we use money from the trust for this, we use money from the trust for that. Okay, it just can't make cash distributions directly to the beneficiary.
Perfect. And then another person made a point that a trust pays much higher tax rates than an individual.
Yes, that's true. And so this is this is one of the reasons why, generally speaking, when I'm talking to clients, and again, I'm making a generalization here. I'm giving all my disclaimers, I know. But generally speaking, when if I'm talking to a parent, right? Um, you don't need to set up the special needs trust as a standalone trust. I mean, you don't need to set it up and fund it today, right? In order to save money for your special needs child. Okay. Because as you're saving that money, as it's growing inside the trust tax rates are much higher than individual tax rates. Okay. So rather than fund a special needs trust to pay for my, to save, if I'm going to say I'm going to save money for the long term for my special needs child, I can do that, or I'm better off doing that through a brokerage account in my name, through IRAs, through making sure I'm funding and maxing out to the extent possible my IRAs. Okay, funding a life insurance policy that will then pay into the special needs trust. Okay, because as the money grows in these different vehicles, to the extent that it's taxed, if it's an IRA, or if it's a life insurance policy, it's not going to be taxed as it grows. But if it's in a brokerage account, let's just say, to the extent that that brokerage account is taxed, it's going to be taxed to me at my tax rate, not the trust. Okay, so in that scenario, the trust, if I just say, okay, I want this set up as a testamentary trust when I die, when my wife and I die, then you can receive all of these assets. Okay, that's a much more efficient way to doing it, of doing it. So that's a great point, Heather, and thank you for mentioning that.
Yeah, if you have a question for Greg, please feel free to unmute yourself and ask. I'm sure, Greg, maybe you have another minute or two to answer some questions.
Sure.
I do have a question about what you just said, if you don't mind.
Sure.
So when then do you fund the special needs trust? Right? So if you're not doing it now and you have everything else separate, so yeah.
Yeah. So when do you so I mean, there's a couple different ways of thinking about it. And again, it's going to depend on what your what the needs of your child are. And let's say, for example, that you're the only one that's going to be funding this, or you and your spouse, maybe you're going to be the ones that are funding this, right? This trust is not going to receive funds from an uncle or a grandparent or whatever, so there's no need for it to be set up now. Okay, so to save for that child currently, or let's say that they're 18 or whatever, and they want to begin saving for some different needs, that's where the able account makes a lot of sense. Okay, so we can save in the able account, we can invest the money, grow tax deferred. The money can be used during your lifetime. um, when do you fund the special needs trust? The special needs trust can be funded at death. Okay, in my case, at my death. All right, if we're talking about my son. So I have a life insurance policy, right? That life insurance policy is going to pay out, obviously, when I die, right? So that, and the instructions on my a beneficiary designation form of my life insurance policy can list payable to the special needs trust, right? The special needs trust is a beneficiary of my life insurance policy. So when I die, the life insurance policy pays out, funds the special needs trust, right?
Yeah.
My retirement plans. I'm sorry.
That makes sense. Thank you.
Yeah, yeah. And same thing with retirement plans. You can list for the beneficiary designation, you can list the special needs trust as the beneficiary of a retirement plan, and again, that can help to fund the special needs trust. A home or real estate, right? That can also go into the special needs trust when I am no longer here.
And then, so once that happens, right? So I'm thinking, in the future, right? Once I'm
Mhm.
gone, say example, my son is living elsewhere, he's in a home, then that special needs trust would then fund or pay for his care, right?
Yeah, yeah,
Okay.
absolutely. And then again, because it's in the special needs trust, if there's other resources that can pay for his care, Medicaid, then the trust will not have to be used for those things, right?
Got
But
it.
anything
Right.
anything supplemental. That's why you hear the other name for a third party special needs trust is a supplemental needs trust. Okay, if you ever heard that term, supplemental needs trust. So it's paying for those supplemental needs.
Things above and beyond that. Yeah. Okay. Makes sense.
Yeah.
Hey, Greg.
Thank you.
Hi, Lucy.
Hey, thanks so much for all this information. I think it is important for people to know that to have the trust ready to go in case you die, and so that you can give the name of that trust to grandparents and those uncles that might, have every penny they ever made, like my brother. So that way they don't, because he could so easily leave his money to his nieces and nephews, of which my son would then be a part of that. And that would really mess up he gets a lot of government benefits. That would really mess that up.
Yeah. Yeah. That's a great point, and that's why having these family conversations is so important. If you have an uncle that has expressed that desire, then yes, letting them know that, hey, this is what you need to do. This is how you need to structure things. And in that case, okay, let's say my uncle is, he's my uncle. And he may not be older than me, right? Depending on the family, but let's say he's older than me, right? Say he's my dad's age. And so, all things being equal, he's going to pass before I do, right? So in that case, I may not want to have this set up as a testamentary trust in my will, because a testamentary trust is set up when I die.
Right.
In that case, I might want to set it up as a standalone trust. I want to set it up today, okay? And it exists, it's there today, so that when my uncle passes away, right? When my parents pass, if he's inheriting, grandparents or whatever, whoever wants to leave funds to that special needs child, they can do that. And here's the instructions on how you do that. Now, again, if that's not the case, and it's only going to be funded with me or my wife, right? Then maybe, okay, I can set it up as a testamentary trust. But in the example you mentioned, yes, you would want to set it up as a standalone.
Got it. Thank you. And I was the one that had the question about the cash distributions to from the trust. It's my understanding that you can send money from a special needs trust to a stable account.
Yes, yes, and that is
improve their quality of life or whatever.
yes, and that is sometimes the workaround, and that's why I mentioned that special needs trusts and ABLE accounts often work hand in hand, right? ABLE accounts can be used for housing and food, right? And so you might have certain expenses that that you want to use funds from the special needs trust from. You can send them to the ABLE account, and then use those funds, withdraw from the ABLE account to for those certain expenses. So that's a great point.
Well, we really appreciate your time. Thank you. I'm going to mute myself now.
Thank you. Thank you so much for your question. I saw somebody say you're driving all over to Atlanta for appointments. That was number 4. So yeah.
Greg, thank you so much for today. We just really appreciate you sharing your knowledge and giving our families your time. Thank you for sharing your email address in case parents need to reach out to you, and that's greg@choice-wealth.com. Greg, thank you for today. We really appreciate you.
Thank you. Thank you so much. I really appreciate the invitation and opportunity and the questions. Thank you all.
Absolutely. Thanks so much, Greg, and everyone have a beautiful day.
Thank you. You too.